Hello and welcome. I'm Amanda Ludwig, and I will be your host through what I hope is a very fun journey through employee retention credits. I know tax credits, government funding isn't the most riveting of topics. However, when I work with small and medium-sized businesses and they start receiving checks for $200,000, $300,000, $400,000 in the mail from the IRS, it gets pretty exciting. So that's why I love sharing this information. It's one of my favorite things to do because I love seeing the end result. So let's get through the nitty gritty together in 30 minutes or less so that we have time for Q&A at the end. That way we can find out if you may be eligible and how much you may be eligible for so we can get to the fun stuff. So a couple of goals right off the bat. One thing I'll tell you, it's a goal that's not in the presentation, but it's a goal that I set. Every time I do a training like this, I always set a goal of how much funding I hope to bring to the small businesses that have attended. It's just a personal goal that I set every single time I make this particular presentation. And so for this call, collectively, I set a goal of $10 million to help the businesses that are on this call. So if you want to be part of that 10 million, stick around and let's see what we can do. So in addition to my personal goal that is for you, we need to define the grant. We need to make sure we understand it in full. We need to bring clarity to some misinformation. There's the worst information floating around about this program, and we need to clear that up today. We also need to talk about your eligibility, and I will be happy to share with you some next steps if this is something that you think is right for your small or medium-sized business or nonprofit organizations, because for once, you are not excluded from this program, nonprofits. So I hope we have lots of nonprofits on the call today to talk about this funding as well. So diving right in, let's get the nitty gritty over with. This program, believe it or not, this program came out in the original CARES Act. But if you remember, we didn't talk about it back then. We were talking about PPP at that time. And the reason is that PPP or ERC, at that time, you had to make a decision between the two. And everyone went with PPP because that was what was in the mainstream media. We were hearing about it all the time. And so that was sort of the natural flow. And also it was a little easier to come by at that time, PPP over ERC. The good news is that ERC is, in my opinion, the better program between the two, and the guidelines changed. The guidelines changed in 2021 in this Consolidated Appropriations Act. But what's really interesting is, well, I think it's interesting, is that this really went under the radar. And I can say that because I'm an accountant and I missed this change. And not only am I an accountant, but I was heavily involved with helping small businesses receive funding during COVID. So PPP, yes, EIDL helped lots of people receive that funding, state funding, local funding, city funding, anything I could do to help small business during that time. I was making videos on YouTube. I was sending out e-newsletters to thousands of businesses. I was going on the radio. Anything I could do to get the information out there to help small businesses. And as active as I was, even I missed this change. So that's why I think it's really, really important to know. You've probably heard about ERC the way it was when it first came out. But what no one's talking about is what it is today after this really, really major change. And then, of course, if you're familiar with the program, you know it was designed to keep people on payroll during COVID. That period has ended. We're all grateful that we've made it through, but we can still go back and recoup the funds If you didn't apply for it at the time, you can apply for it retroactively, which is really exciting. So it is a stimulus program. It's a grant, not a loan. So unlike PPP that came out as a grant and then converted to a loan and you had to spend it a specific way, this funding, when you receive it, it is strictly as a grant. So no applying for forgiveness after and taking that risk. It's based on qualified wages and health care paid to employees during the period. And this is wonderful news. There is no limit on funding. What that means is we're not going to run into the crazy frenzy that we did with PPP. You remember when PPP was running out of money and there was just this mad rush to get the applications in? We're not going to see that with this program because it is a deadline-driven program as opposed to a funding amount program. So we just need to get the application in by the deadline, which, by the way, is coming soon. So we need to keep that in mind. But it's a refundable tax credit. So you can use the funding however you deem appropriate. Again, unlike PPP that had to be used for rent and utilities or payroll, there is no report back for this program. So when you receive the funding, it's essentially monies that you paid that you actually didn't have to pay. So they're going to send it back to you. Therefore, you can use it to do whatever you like with your business. And I've seen so many success stories about being able to hire additional people, buying equipment, expanding technology, moving into a larger office space. There's so many success stories from how people have been able to utilize this funding to grow their business. Also, this is really key because it's just kind of a nice little add-on, no post-award reporting. So you do not have to file anything saying how you spent the money. You do not have to track it. So now, are you seeing why I think ERC is so much better than PPP? It's an absolutely amazing program. However, I think that there is a lot. That's not true. I don't think that there is. I know there's a lot of misinformation about this program because I talk to business owners, to CFOs all the time about this program. And so in those conversations, I get the feedback. I've gotten to learn the concerns about applying for this program and the misinformation that's floating around. So I've compiled some of those things, assuming that these may be concerns that you have. So let's dive into those. Let's work on those. If you have concerns that I didn't cover, we're going to do Q&A at the end. So make sure you jot those ones down if I don't cover it. But here are some of the most common ones that I've compiled from my conversations. If we apply, we'll get audited. No one wants to be audited. So I understand why this would be a concern if your accountant has told you this. However, there is, in my opinion, no more risk of being audited because you applied for ERC than there is for PPP or EIDL or simply filing your annual tax return. This is an IRS program, and if you have your application prepared by someone who really knows what they're doing, being audited shouldn't be a big concern for you. Again, you want to make sure that your application is clear and concise and accurate. And there is some information I'm going to share with you about some things that have happened to the IRS that may trigger an audit. But if that's what you've been told, that shouldn't be your primary concern because it is the applications that were filed fraudulently. Those are the ones being flagged and causing the audit. Now, I do know a story of an audit, which interestingly enough, resulted in the IRS owing the client more money than they had even originally applied for on their ERC application. So I thought that was really excellent news. But they had their application prepared by a qualified company who is very, very conservative, which is why they actually got more back rather than being penalized by the IRS. Another big one, we have too many employees to qualify. Now, there is a wide range of number of employees that you can have to qualify. I'm focused on businesses between 5 and 500 Any resource I give you for being able to apply will be for businesses in that size, but you can apply if you only have one. As long as that one is not the owner, you can apply with just one employee. Another one is the program ended in 2021. This one is a little bit true. The program is ongoing until the deadline. However, the period that you can look back to apply for did end in 2021. So the deadline is no longer 2021, but the period that you can apply for is 2021. We did not have the required decline in revenue. So common. This one, remember when we talked about how this program came out and then the rules changed? This is one of the rules that changed that went under the radar. So you did used to have a decline in revenue. Now you can have a decline in revenue, or there's a second way to qualify. So if you've been told you can't apply because you did well during COVID, you didn't have a decline, that may no longer be true for you if you have a second qualifier. So I'm going to tell you what those are here in a minute. Another big one is that people believe that they had to have been closed 100% during COVID. There is an operational impact that we need to document, but it does not have to be a 100% closure. And then this is the one I hear second most often, is we received PPP, so we don't qualify. Again, this is part of the original legislation, but the rules have changed. In fact, 100% of the businesses that I have helped receive this funding also received PPP. So it is no longer an either or, but I can tell you where that came from, right? So the original CARES Act said you had to choose between the two. Then we had the change in 2021. And now this is actually a snip from the IRS's website. I put the link there. Hopefully you get a copy of this presentation later. The IRS is actually outlining how you can apply for both. So it's I would say it's even encouraged. In fact, there's a place on the IRS website that said that we are advising small businesses to apply for credits, and they listed a bunch of programs, ERC being one of them. So again, you used to have to choose between the two. Now you can get ERC and PPP. You just can't double dip for the same time period. So you can't apply for a quarter that you used PPP money to cover 100% of your payroll. But you can do both as long as you're not overlapping for the same time period, which is wonderful news. Here is the number one objection that I hear. And as an accountant myself, this one I understand highly because I'm an accountant. And also it probably is the most frustrating one for me because I am an accountant. So I will never throw my colleagues under the bus. In fact, I know some of the registrations for this event. I've got some accountant friends on this call, and thank you for being here. I hope you can share this information with your clients. But I want to tell you how and why this happened. If you've been told by your accountant or by your attorney that you don't qualify, there are some reasons for that that are really, really clear. So one of them, of course, is that we just missed the change in the rules. It wasn't a focus, right? Because the original CARES Act had a lot of impact on how income taxes were going to be filed. So everyone was paying attention to that. And then there was just sort of this other one that kind of came out of nowhere. We missed it. We've got it now. That's, hopefully everyone is on board. But I will tell you that I have yet, I have yet to work with someone who called me and said, my accountant said I should do this, so that's why I'm calling you. Most of the time, they realize in working together to review eligibility that they are eligible, and then we're reaching out to the accountant to make sure that they're on board once they've received this new information. So again, it's just an oversight from having not reviewed the newer information, the newer guidelines. There's also this little bit about quantitative versus qualitative, and I'll tell you what I mean by that. As accountants, we live in a world where 2 + 2 = 4, and we always want it to equal 4. We don't like gray areas. We don't like 2 + 2 to be 5. It just 2 + 2 is 4. And if it's not, we have to go back and find the solution. When you're applying for ERC, if you have a revenue decline, it is a numerical calculation. So that one's okay. That's easy. That one's safe for us. But if you have one of the other qualifiers, then the application is going to include a narrative. We don't like narratives, okay? Because it's a little outside of our comfort zone. We deal in numbers, not narratives. So it's almost more like a grant application for those of you who have completed those. And so that's just not a comfortable space. And so that's often an objection, just lack of knowledge, and then just a lack of being comfortable because it's outside of our normal space. There's also a piece about it not being lucrative. This is a program that's going away. So if your accountant didn't opt to learn how to do this, they may just be a smart business person, knowing that investing time, money, and energy into training for something that essentially is going away, when they could be putting that same focus into learning new tax laws, because we all know taxes are never going away, right? So it's a wise investment of time to stay in what you specialize in. And so that's why a lot of accountants chose not to specialize in this. So, don't be too hard on us accountants, because we chose to be good business owners and focus on the most important thing. But that if you were told by your accountant, it may be simply that they don't do them because it's not necessarily the best business model. And then the last one is the IRS Dirty Dozen. Now, if you don't know what that is, and it's okay if you don't, again, we accountants, we like these nerdy kinds of things. So the IRS Dirty Dozen is a list of a dozen scams that the IRS put out. And guess what was on the list? The employee retention credit. So, of course, everyone was freaking out. Don't do ERC. It's on the IRS's Dirty Dozen list. They don't like it. They don't want people doing it. Well, that is just silly. Because here's the reality. Employee retention credit, it's an IRS program. They are the ones that you apply for the funding. The reality is, if you read this short paragraph, the problem that they're identifying on the Dirty Dozen list is not the program. It is sketchy companies that are conning small businesses. And I know you know who they are, because you've gotten 472 emails and your phone rings every day, some robocall trying to sell you on ERC. So you know who these companies are. So that's what the IRS was warning against, not the program, but they were warning you not to work with companies that are not qualified to prepare your application. So if your accountant told you this is not a good idea, hopefully that puts your mind at ease, because again, this is information that just kind of went under the radar, except for the big IRS announcement, which of course had everybody in a bit of a frenzy. So now that we've cleared up the misconceptions, let's talk about you being eligible. So it's important to know that there are two ways to qualify. Again, there used to just be one, but now that we know that there's two ways to qualify, that's sort of the secret that nobody else knows about. So the two different ways, one is the gross receipts. That was the original qualification, and I'll give you exactly what that looks like. The other, however, is the full or partial suspension of business operations. And I'm going to give you some tips on what that may look like or have looked like for your business when it comes to eligibility. So it's important to know, number one, we've got to recognize that you can be eligible for one quarter and not another quarter. So everything I'm going to talk about in this section, keep in mind it's going to be reviewed quarter by quarter. So you can be eligible, not eligible, and then eligible again the next quarter, and that's okay. So for gross revenue decline, we're looking at a 50% decrease in 2020. Again, quarter by quarter compared to 2019. But then for 2021, it changes and it's only a 20% revenue decline. But keep in mind, when you pull those numbers, you're going to compare 2021 also to 2019. So this is always a COVID quarter compared to the equivalent quarter in 2019. So Q1 2021 to Q1 2019. So that's one way to qualify. That's the one that most people seem to know about. The other way to qualify, the one that you now know about because you're taking the time to attend this webinar, is the full or partial suspension of business operations. I've got a list for you of what some of those things look like. So if any of these happen to your business during COVID, I want you to write it down. This is really, really important because you need to have some ideas for your eligibility part of your application. So I'll give you a couple of examples. So a reduction in services offered. That does not mean that you were 100% closed. It just may mean that you had to cut off some of your services that you could not, due to government order, you could not actually continue that particular service for your business. So again, it doesn't have to be 100%. So think through, down through this list, did any of these apply to you? If so, jot them down. I'm going to give you a second to do that. All right, now on the next part of the list, this is just a continuation of the prior list. If any of these apply to you, jot them down. And even things like not being able to do something from home. So certain businesses converted well to work from home, but there are certain things you simply cannot do in working from home. So did that apply to you? I'll share my qualifier for my company because I did receive ERC from my company, the inability to visit a client's job site. I have an accounting firm. We were deemed essential in my state. So we were not required to close. However, many of our clients closed, and we provide services at client's location. If I'm going in to do a consultation, to consult for a company, I'm going to go in, I'm going to see how they're functioning before I advise them of changes. And so we couldn't do that because they were closed or they weren't having people from the outside coming in, even if we were willing to go. So whatever was the situation, that was a huge impact for our business because we could no longer go to our clients' locations. So think through these ones, jot them down. They're going to be key for your eligibility if you don't have the decline in revenue. But I want you to know, you don't have to have all of these. You don't even have to have 3, or you only need 1. So if you have more than 1 you jotted down, you're doing good. So let's keep going. This full or partial suspension of business operations. This is a really key piece because a lot of people think that, if they had one of those qualifiers, it also had to be then like 100% of that. But what's really amazing is the IRS has been quite generous with their definition of what they consider to be a nominal impact on those operations. So they're just looking for a 10% or greater impact on sales or hours for that particular part of the business. So we only need greater than 10%, which is wonderful. But keep in mind, that doesn't mean a 10% reduction in revenue. It's a 10% reduction in that operation, in the ability to operate in that way. So this is very, very generous. Now you know why this is sort of the big secret, right? This is a very, very generous parameter for us. So word for word, it means that the shutdown order, again, the government order, must have suspended at least 10% of your revenue producing operations. Revenue producing operations, not revenue. So what I'm going to ask you to do now is to read this question and see if you are able to answer yes to this question. I'm going to give you a minute to do that. most of the time, people are able to answer yes to this question. So if you were able to answer yes, let's keep going because I want to share with you a couple of quick hitters, and then I want to get into the dollar amounts you may be eligible for. So ERC does apply to W-2 employees. It does not cover 1099 workers, so subcontractors will not be eligible for the count for the funding. Qualified wages, because it's based on qualified wages, that's going to be anything that was subject to FICA tax. So if you're familiar with your 941, the wages you pay the FICA tax on, those are the ones that are going to be looked at for this program. The time period that's covered, March 13th of 2020 to September 30th of 2021. The quarters that fall between that date range are the quarters that are going to be reviewed for ERC. Now, this is important. When does the program end? So we're looking at April of 2024 for the deadline for 2020. So we don't want to miss any quarters. So I'm just telling everyone the deadline is April of 2024 because we don't want to miss an entire year's worth of eligibility. However, the IRS is on pause right now for accepting applications. So they announced that they are not taking applications because there's so many sketchy applications. I don't think they used the word sketchy, but y'all know what I mean. There's so many fraudulent applications, that's better, that they weren't taking anymore. They were going to catch up on the ones that they had. They're going to do some work to kind of shut down these fraudulent companies to make sure that small businesses are not being scammed. And they're going to resume accepting applications in January 2024. I want you to be in queue when those applications open, okay? Because the deadline is going to be April. So we're going to be talking about January to April. So we don't want to wait because there's certainly going to be a backlog when they reopen. So that's why we want to get this rolling now so that you're in queue for that application reopening. So the deadline is April, but we start now. All right. And then do part-time employees count? A really common question I get. They do count. So they're not excluded like in some of the other programs, but we need to count each part-time employee as a half. So when you're talking about number of employees, just count each part-time person as one half. All right, now the fun parts. How much ERC can I claim per eligible employee? So the max amount is $26,000 per employee. I'll let you all do a little math in your head because it's fun. All right, now that you're hopefully excited about that number, I'll tell you how it breaks down. So for 2020, we're talking about up to $5,000 per employee, and that's for the entire year. So all the quarters combined, if you got the maximum amount, it would be $5,000. However, 2021, the maximum is $21,000 per employee for the year. So that's $7,000 per quarter because remember, it's only the first 3 quarters. So $7,000 per quarter for those first 3 quarters. So then you put the 2 years combined, that's where we get the $26,000. So there's a little disclaimer here. There is some extension beyond that program or beyond that deadline timeline, but it's not very common. So it's something that will be looked at for you, but it's a period that most people don't qualify for. So we won't focus on that. So here's a quick recap. So we know it's up to $26,000 per employee. To give you a better idea, these are national averages. Because again, if you got PPP, you have to deduct that from the ERC amount because you're not allowed to double dip for the same time period. So I've gotten some averages for you if you got, depending on how many PPPs you got or if you got no PPP, what dollar amounts you're going to be looking at when we're talking about national averages. We've covered that there's no limit on funding. We know the time period, and we know that there are multiple ways to qualify. So for moving forward, what do I need to know to apply? Well, you need to know a lot of things. Just a few of them are listed here. And I got to be honest, even as an accountant, this list was pretty intimidating when we're talking about multi-state government orders and what aggregation affiliation rules. Like, these were not things I wanted to have to deal with. So I worked with a company to have them prepare my application. Then I had them do my sister's and my best friends. And I mean, I really vetted these people, okay, before I started telling the world about not only this program, but giving them recommendations of who I would recommend that they work with. So the good news is you don't have to know all these things. You do if you're going to apply on your own, which I don't recommend. Again, I'm an accountant and I didn't even fill out my own application. But I do have resources for you if this is something, if you've written down a few things that you believe you're eligible, I have resources for you and I'm happy to share that with you during the Q&A. So let's dive into some questions and answers for our remaining time, and let's see if we're going to hit our $10 million goal.